It is that time of the week. We sit down and talk to our buddy Zach Abraham, Chief Investment Officer, Bulwark Capital, friend of the show, sponsor of the show. And man, there's so much stuff going on. I don't even know where to start. It's feeling a little uncomfortable outside. Let's be honest. The government's back. Yeah, whatever that means. But the reality is today didn't look very good. Yesterday didn't look very good. I think people are a little nervous. AI, who knows what's going to happen? And oh, by the way, there's no jobs report.
Yeah. You know what's funny? I was thinking about right before we got on here, and for anybody thinking I'm spiking the football here, they haven't watched me do this enough because if I make any prognostications, especially regarding time frames, those are lucky. But remember, we were having we were having a conversation about 2 weeks ago where I just told you, look, man, if you look at the charts, I get why everybody's bullish, but I just feel like this thing is just out for the moment, right? Not like saying, but just it's way overrun its skis. I'll be really surprised if we don't take a 5 to 7% hit before the end of the year. I think the market's down about 2% since we had that conversation.
Yeah.
So I look at Bitcoin breaking below 100,000 here. I look at the high flyers like Palantir, Nvidia getting smashed today, which is why we put a short on Palantir 3 days ago, I want to say. Um, I just this is a market that's got a lot of soul searching to do because you've got valuations that have just really, really outrun the underlying fundamentals. And that's getting more and more clear every single day. Just you'll hear financial results from international companies that come around and are just mind bending good, and the market's response to them is just muted. And if any American company says anything about AI, just through the roof, right? Like AI is only going to help, only going to help tech companies in North America. So, and then you look at, like you said, no jobs report. I will say this though, I saw a headline on The Economist saying that the bottom just fell out of the job market. Hey guys, if you have a bottom falling out of the job market that corresponds with a government shutdown to the tune of like 4 or 5 days, more than likely those lost jobs are temporary and government jobs. Now we'll have to see, but I would just say pretty big coincidence if that wasn't the case. But you still see a lot of signs of duress, and if this is the beginning of a stock market pullback, um, it will hit fourth quarter, especially because the thing that you and I have been talking about, which is we are so used to in America economics and the underlying economy driving the stock market. But now you have a stock market that's worth about 215% of GDP. This will blow your hair back. Uh, so right now you're running about a $65 trillion stock market if you include all US stocks, not just the S&P 500. You're running about 30 trillion GDP. Historically, that average has been about 90 to 100% market cap to GDP. Do it now, we're like at 215%. Here's the thing that I don't think a lot of people are paying attention to. A 30% stock market pullback, especially when you're trading at 32 times earnings like we are now, that is not a cataclysmic event. That is something that on average you'd expect to see two to three 30% drawdowns over any 10% or any 10-year period of time. If you had a 30% drawdown now, though, that would nuke an amount of household wealth that is the equivalent of 66% our entire economy.
Oh my God.
I know I hadn't even looked at it in those terms until the other day, just because we're not used to the stock market being this highly valued in relationship to the underlying economy. Well, think about that. If you nuke 30% or 60% or 30% of household wealth, which is the equivalent of 60% the entire size of your economy, that's probably going to cause some problems,
Yeah. Yeah.
right?
I think it's going to cause a lot of problems.
Yeah, and one of the things that we're saying is, hey, what is the biggest consumer retail block in the country? It's baby boomers, right? And those purchases, especially if you include purchases they're making for their children,
Yeah.
well, they own all the assets. So this is what we're saying is, I think really before you see economic indicators turn down, and whether that happens in the next 3 months, 6 months, 12 months, whatever, when it does, I actually think you're going to see the stock market go down first. And that is what's gonna, because if you've got baby boomers who are 85% of their monthly income is derived off of their, their securities portfolio, and that portfolio takes a 30% hit, they're probably buying the kids less stuff for Christmas.
Yeah, it's going to be interesting talking to Zach Abraham, Chief Investment Officer, Board Capital. The jobs, Mark, all the stuff we could sit here and talk about, but the reality is people are feeling uneasy. AI, I mean, this week you saw several big companies dump out all their NVIDIA over the last couple of weeks. And it's just been, I mean, that was really like, holy mother of goodness, not just a little bit. They got rid of everything. And then I saw Altman. Did you see the interview where he was like, saying essentially, yeah, because somebody said, hey, look, you got 13 to $15 billion in revenue and you're $1.5 trillion in debt. How in God's name, could you ever manage to do anything? And he essentially said, well, we're at the point now where, the government would kind of be our de facto bank should things, we're too big to fail. That's got to, what?
Yeah,
We are.
what concerns me about that is he's well connected enough to where I got to imagine he's not just saying that off the cuff.
No.
But to say that he's too big to fail, not at all. Not even. It's not even. It's there's so many other places that have LL. I mean, DeepSeek jumped. No, I mean, that's insanity. I think he wants to be too big to fail for sure. I think that he might have a good amount of bureaucrats convinced he's too good to fail. I think that those bureaucrats might have been encouraged a lot by other investment bankers and hedge fund managers that want a piece of Chat GPT, right? But is he too? No, I mean it's a completely ludicrous assertion. And quite honestly, when you look at what a race AI is, I'll be absolutely the winner of AI will probably be somebody we haven't heard of yet.
Yeah.
You know what I mean? Like that's wouldn't you think so? Like the old now somebody might partner with them and or buy a majority stake or something like that. But first of all, I don't think there will be a winner. But second of all, to sit, I mean, how in the world is a company with $13 billion of revenue of too big to fail?
I think their whole thought process was we've gotten so many of the movers and shakers, venture capitalists, government people to throw so much money at this. They wouldn't dare let $1.5 trillion. This isn't, this is $1 trillion+ We're not going to, they're not going to let this go.
Well, what I would say is if they've thrown so much money at it, they better throw more.
Yeah.
Right? Like, no, I mean, and then to me, it looks really obvious, and I hate drawing conclusions because I feel like today, one of the things you have to be careful with is new technologies, right? And the reason why is because no one's ever seen it. And I have made multiple mistakes assessing economic viability of new technologies. And the one thing it's taught me is sit back and see how it plays out. Nobody knows the end. That being said, truthfully, when I started seeing these equity based finance deals circularly, where when you started looking at the deal, you went, okay, this all works if all your stock keeps going up. It
I'm
doesn't.
loaning you money to buy my product, and we're going to both book it as profit. Hey, that's a win.
Yes. And in exchange, I get your equity, which undoubtedly has to continue going up because I'm buying all your products,
Yes.
right? Until you run way out in front of it. I'm not saying we have, but Nvidia topping 5 trillion could be the point, right? A $13 billion revenue company with $1.5 trillion of spending commitments over the next 5 years, that could be the point. Um, if we're not there yet, my belief is we got to be really close. And then something else that we talked about too is, and you know how markets work like this. I thought my analyst, my head of research actually made a really, really astute statement. He said, look, when I see a company get beat up after earnings because of massive AI capex spending, that's going to be a really good sign that the party's close to over. Well, look what's happened to Oracle and Meta's shares since they announced their last quarter of spend and they went crazy. Both stocks have been smashed. And they're still really expensive too, by the way. So the other part I'll say too is I have a really hard time believing that we've got AI 100% right and everybody in China's a bunch of idiots,
No, I don't
right?
think that for a second.
They're not doing anywhere close to the capex spend that we're doing. Bottom line is they don't think it's going to be worth it, and they don't think it's a good allocation of capital. Um, I'm not assuming that we're 100% wrong either, but when you look, I don't think people are appreciating the amount of capex spend and the type of impairment that that's going to put on these balance sheets for years to come. You know, not to mention the market cap, like we were talking about last time. Google announces a $30 billion debt offering, and their stock goes up by 38 billion. You know, like that's the part of it to me that I'd be the most concerned is if you're equity holders, and Google's probably the most reasonably priced out of any of those things. But just using that as an example of, at the very least, if you look at this marketplace, you know you're not looking at a marketplace where things are soberly priced.
No.
I mean, that's without question.
Talking to Zach Abraham, Chief Investment Officer, Bulwark Capital. Uh, Fourth quarter, I was talking to my buddy Ken, who's the news director here out here in Nashville, and we BS all the time about stuff. And he says, we were talking the other day, and he says, man, you know what's weird? He goes, normally I do 5 stories a week on so and so this time of year is hiring 50,000 people or 100,000 people. He goes, I don't think I've done one this year about that when it comes to the Targets or the Walmarts or any of that stuff. It just seems odd.
It does. I know what you're feeling. See, this is what we've been saying for the last 2 to 3 weeks, and this is not good database analysis. So bear with me. But when you're at a place where you look at the underlying fundamentals and you know they are not sustainable of and by themselves. Now we live in a different age because we have watched unsustainable fundamentals get supported by, right, government stepping in, central bank stepping in. But when you sit back and you're watching all this stuff going on and you're watching the exuberance and the excitement and people throwing money, and you just you kind of feel the underlying setting of it just not matching, right? It's almost like you've heard the percussion kind of wander off on their own and the horn section's kind of departed, right? You kind of have this schism. That's what it feels like. And to me it feels like you're in recession now, and the unbelievable capex spending that is going on is masking it. And people are like, oh, that's not enough. And I'm like, well, okay, so you're talking about a $30 trillion economy. Okay, so 10% of that is 3 trillion. Okay, 5% of that's 1.5 trillion. You're talking about an economy where we consider 3% growth healthy levels of growth, right? So you've got a capex cycle right now of 1 to 1.5 trillion, so effectively 5% of GDP. That can mask a lot of stuff.
Yeah.
And more importantly, to go with what you're saying, if you told me, if like God came down and said, listen, here's what's going on, that's exactly correct. You're in a little bit of a recession here and it's getting covered up by the capex spending. Doesn't it feel like that?
Yeah, it does.
Uh,
It feels like we continue to put a lick of paint on something, and it just it feel at some point we're going to go down, and there's not going to be anything more for the paintbrush, and that's
yeah.
that's the the sense, and and this is a perfect time. Trump this week, talking about this, and we said this about Biden. When you discount people's feelings, to me the most important thing is what does the consumer feel? And if you ask most consumers, they don't feel good right now. They feel uneasy. The life's gotten more expensive, and telling everybody the affordability issue is in your head and it's the greatest economy of all time. You could say that, but when you go to your bank account, it does not feel or look like it's the greatest time.
Dude, I coach it. Well, I coach a fifth grade football team, and we had our banquet over. We had our banquet over at my house, or party, right? End of your party. And one by one, they kept walking up and asking me if they could spend the night. So of course, right?
Yeah.
I'm the coach. I can't tell no. So I end up with 15 fifth graders spending the night. And they get up the next morning, and my son asked me, Dad, can I order McDonald's for everybody? And I go, sure, yeah, get him some egg. I don't correct me. I think the McDonald's bill was like $220, $230. Now I know most people aren't ordering breakfast for 15 kids. Okay, but my point was sitting there going, you and I are above median incomes, right?
Yeah.
I'm sitting there looking at that going, okay, I understand it's 15 kids, but it's not 15 adults,
Yeah.
right? And I'm looking around going, I'm shocked. I'm feeling it, right? I'm sitting there looking at these sticker chargers going, how are people keeping
How's
their
the average
heads
person
above
doing?
water, man?
We went to the movies on Monday night. So I took my wife and Charlie went and saw another movie, and I took the older 2 kids. We went and saw the Predator movie. Okay, we spent a little bit more because we saw the Predator movie in 4D, but we got candy and everything. It was 200 and some bucks
Dude,
for
I
for
know.
for 5 of us to go see the movies.
I know. I don't know how I don't know how people are doing it.
No, I
And
don't
I
either.
mean, I know that again, those kinds of things do not impact me financially,
No,
but still sitting there looking at it and going, we're not even trying to do anything crazy right now. I'm trying to buy lunch. I'm trying to buy egg McMuffins for 15 kids, right? It's isn't a big deal. But boy, the sticker prices, it's unbelievable. Then you start doing the math. Look at what house payments are. I I I heard a stat today. Crowdfunding. What I'm forgetting the main
the
name of
GoFundMe
the
or whatever.
yeah, GoFundMe. He said that they are getting more crowdfunding campaigns to help people pay with cost of living expenses than they are tragedies and things like that.
That's insane.
Yeah,
That is That's crazy. That's crazy.
it
Talking to
is.
Zach Abraham, Chief Investment Officer, Bold Capital. People want to talk to you, find out about your webinar, your preview webinar. What do they do?
Yeah, pretty easy. So you go to bulwarkcapitalmanagement.com. A prompt will come up. You can sign up for free. It doesn't obligate you anything. You can hear our forecast for the end of the year, and more importantly, about what we're doing going on in the next year. And then the most important thing, and it's not bragging, we've had years that aren't as good, but sitting there going, hey, everybody wants big returns, guys. We're up over 30% this year, and we took less risk in the overall market. I want people, and you and I have talked about it, but just really informing people about there's a lot of risk out there, but there's also many generational opportunities that are that appear very low risk. And we just want people to know about that.
Right on, brother. Sounds good. We'll talk to you next week.
All right, sounds good. Thanks for having me.
Investment advisory services offered through Trek Financial LLC, an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ. Investments involve risk and are not guaranteed. Past performance doesn't guarantee future results. Trek 24308.